Welcome back to Morning Trade Live. Time now to go inside out on Nvidia post earnings. Joining us now for insight, we've got Michelle Connell, President, Portia Capital Management. Michelle, thank you so much for joining us today. Nvidia, by all accounts, really had another banner quarter. When you think about what earnings looked like, when you think about what revenue looked like, although, sometimes the whisper number is a little different than what we actually saw. But what stood out to you when it comes to their latest quarterly report?
Well, first off, thanks for having me again, Diane. I really appreciate it. What really stood out to me as a fundamental analyst and a prior life, a semiconductor analyst, was the cash. The amount of cash that this company is generating at this point. It's just huge. I mean, their free cash flow was almost $17 billion for the quarter. That's an increase of 138% year over year. That was growth 150% higher than their sales. And so that puts their current cash balance at almost $40 billion, and that's after $11 billion in buybacks. So that's a lot of money for NVIDIA to continue to scale and innovate and keep ahead of their competitors.
So when you think about those numbers, $16.8 billion in cash this quarter, reserves nearly $40 billion, as you just mentioned. When you think about this war chest, how does it allow it to connect, not only continue its leadership position when it comes to this AI arms race, but continue to scale, in your mind, beyond, say, AMD or other competitors? Obviously, it has a clear lead, but will it maintain that momentum from your point of view?
Well, when you look at their closest competitor, based on the street's view anyway, AMD is way behind. Their database sales were about $4 billion versus NVIDIA's at $30 billion, and AMD's cash is about a tenth of what NVIDIA's is. And if there's one thing I've learned the hard way in the past 20 years as a technology analyst, the big can always get bigger if they know how to use that cash. And sometimes valuations may look expensive, but you have to look at the long term. And I think at least over the next few years, there is probably some significant upside that will continue to be realized in NVIDIA.
So is NVIDIA still the Goliath here and doesn't need to be concerned about Davids of the world like an AMD?
I don't think that they need to be concerned, but they just need to continue to use that cash in a very strategic way. And at this point, I think they have the management team that's going to allow them to do that. I think what's interesting in the last few days, their company and their CEO is starting to give their best customers a taste, starting to give them access to that Blackwell chip. I think in a way it's kind of like our favorite drink or our favorite sweet. They're going to want more of that Blackwell chip. And I think we're going to see higher demand as we go into the new year throughout 2025 and beyond.
So higher demand as we go into the new year. Do you see any road to AMD closing this gap in a shorter time frame than the next few years?
No, I really don't. I think when you're looking at that huge difference in cash and the lead that NVIDIA already has in terms of innovation and the fact that they have some great customers that are already utilizing their chip, you have the Amazons of the world, the Googles of the world, that's significant. And already NVIDIA is already starting to think about, well, what next is important for AI? How are we going to use this at a higher degree and a more productive manner for our customers? I think that is going to continue to keep them ahead of the AMDs of the world.
Okay, and we're seeing a little bit of a pullback of NVIDIA today, but it seems to me, I don't think it's entirely out the window, but you talk about being normally about fundamentals, but there is some momentum action that has been occurring here. Are you still in the camp of, say, ditching fundamentals and riding the momentum when it comes to NVIDIA?
I kind of say that tongue in cheek, Diane, because fundamentals still are always important. But when you look at the fact that I'm not going to put everything plotting in a spreadsheet as I might have done in a prior life looking at semiconductors, but I'm looking at the bigger picture, especially the cash. And the cash is always going to give a company the ability to stay away from their competition, or at the least give them a really good run for their money.
When you think about wait times for Nvidia's chips, especially when you think about Blackwell, although they said there's still demand for Hopper, do you see this as pointing to kind of the more positive, say unprecedented demand, or is this a vulnerability in your mind?
You know, that vulnerability kind of showed itself in August. There was some concern there that they wouldn't be able to supply as much of the demand, but that concern seems to be waning a bit. We'll have to see as we go into the new year. The CEO has told us that they're going to be able to supply their customers with the newer chips. If they can't, that's going to be an issue. So that also is something that we should be watching closely.
All right, we will leave it there for now. Certainly watching NVIDIA closely. Investors taking a little bit off the table today. Michelle Connell, president of Portia Capital Management. Thank you so much for the insight. All right, I want to go now to our senior markets correspondent, George Sillis, to trade NVIDIA. George, can you take us through an example trade here?
Yeah, I mean, obviously NVIDIA had their earnings this week, and their overall gross margins are expected to be slightly lower going into the change in technologies for their Blackwell chips. But nonetheless, you have to go with the trends, and the trends are still very positive for NVIDIA overall. I know the market is causing a slight pullback, a couple dollars today, but the trend is still positive, and if you expect the trend to continue to be positive based upon the bullish sentiment and the fundamentals of the business, I'm going to go out to the December monthly contract, and I'm going to buy a call vertical. So in essence, what I'm going to do is buy a 145 call and then simultaneously sell a 150 call against that. Now, earlier today, you could have bought that for about $2.50 a share, or $250 a contract. So in essence, it's bullish trade. So we do need the stock to move to the upside. If you structure this kind of trade, you have to consider, max loss, break even, of course, max profit. Your outlay of $250 a contract is your total loss potential. Your break even in this case is 147.5, and your max profit in this case is also 250. And that occurs if the stock hits the 150 or higher by expiration. So in essence, it's a 1-to-1 ratio trade. You're risking $1 to make $1, or in this case, you're outlaying $2.50 for the outcome of potentially making $2.50 per share.
What's the risk to that, though? What's the risk that one should be paying attention to with that example trade?
Yeah, so the total risk is the outlay. Anytime you structure a call spread or a put spread in any case where you've got your debit outlay, you're paying up front for the structure. The total risk in that trade would happen if the stock doesn't hit the 245. In other words, 245 or lower, and essentially that premium will erode to zero.
All right. Well, those are the levels to pay attention to with that example trade on NVIDIA. George Sillis, senior markets correspondent here on the Schwab Network. Thank you, George.